Welcome back to Investing and Trading Live, sponsored by Online Trading Academy. And if you missed those tickets to the investing class that we do here locally, we talk about how the stock market actually works, how price actually functions and moves in these free classes that a lot of people are coming into at our local academies. And that's what we've been seeing, especially lately. What people are really liking is a physical place to go to learn about the stock market, learn about how it works, the players in the stock market, who's actually moving the market. And then our Online Trading Academy actually has a core strategy that's designed to follow those big institutions. And that's what you got to do to have consistency in the markets. You can text the word investing to the number 210 for 2 seats for this class. Text the word investing to the number 210. When you do that, you're going to get a text back, and you're going to also receive a financial quick start kit just for getting set up. So text investing to the number 210 right now for 2 seats for that investing class. And Al, as we talked about in that last segment, what moves price, it doesn't matter. But what matters is who caused that price to move. And you need to understand that in all the different markets. As I mentioned, I was going to give a market update in this segment here. And if you look at the market overall in the year, it's up on the year. Mm-hmm. I mean, almost from the very bottom of the beginning of the year, it's up. Depending on what you're looking at, they're all a little bit different.
Santa Claus came a little bit late this year.
Yeah, you're right. He showed a little late, anywhere between 4 and 6%, depending on what market you're looking at. One of the things that we were talking about off air is oil and gas prices, how they're going to start and already have started to go up a little bit. And if you look at U.S. oil, which is the ETF for oil on the year, on the last few weeks here, up roughly about 13%.
Right.
So the gas prices usually lag a little bit behind that. Mm-hmm. What's really interesting, so now we're talking about multiple assets. This is the energy sector, the XLE ETF, and this is still near all-time highs. And I think that's why inflation is still there. Even though we've had a little bit better reports lately, it's still very high.
Yeah, well, the PPI came out last Wednesday, and it was down. It was down about 0.5%, and the expectations were it would be down 1%. 0.1%.
Yeah,
and retail sales were down 1.1% too. But the PPI, which kind of measures wholesale prices, one of the reasons it was down is because energy prices had come down, and now that's reversing and going back up again. So people that look at that PPI and say, well, this is showing that inflation is really under control and going down, you might want to hold off on that, on thinking about that, because the biggest part of that drop was energy and gas. Mm-hmm. Now energy, as you mentioned, that XLE is up. Gas prices have gone up about 21 cents, I think, in the last week or so. Yeah. So that's starting to reverse. I had mentioned, I think, last week that one of the reasons gas has been down is because lower demand. China basically shut down. And when China reopens, the demand for gas and the demand for commodities in general is going to go up.
Yeah. Speaking of commodities, gold has really been going up here since about the beginning of November. Sure. Yeah. Gold is actually up almost 18% based on when you listen to the show here since November. So commodities, that's going up. Same thing with silver. That's been going up since the lows it hit back in October, up 40% since then. So we're seeing that type of market move. We had retail sales this week that wasn't very good either. We have some earnings.
Yeah. This is one of those bad news is good news things, though. Retail sales were down, and what the Fed has been trying to do is that, to keep demand down, to keep sales down, and to be honest with you, to keep unemployment up. And, so things may be starting to work. But what we're also seeing, you mentioned gold being up, XLE being up. There's always going to be something that's outperforming. And, the problem is if you are in a buy and hold strategy that has you diversified across numerous different stocks or equities or mutual funds that supposedly will have you diversified in a way where, your losses are going to be minimized, which is true, but diversification, the way Wall Street does it, is not the best way to do it. And we talk about the right way to do it in these classes. But what's also really kind of at the forefront right now are earnings.
Yeah.
And, you and I were talking just a little bit ago about Goldman Sachs.
Goldman Sachs, yep.
Goldman Sachs missed earnings. They had a terrible earnings report. They were down about 6.4%, 6.5%
on Tuesday.
Yeah.
Just one day.
Yeah. The interesting thing is Morgan Stanley was up about 5%. So you have two stocks in that same asset class that were totally opposite. So people are going to be looking at it. Really, what we're looking for, and I think it's the interest in earnings is even more heightened now because we're waiting to see what the impact of the Fed's interest rate increases is going to be on earnings because it's kind of a lagging thing that we need to watch out for.
Yep. So, and why are we telling some of this stuff? When we're seeing good earnings, bad earnings. You look at Target, that'd be retail.
Right.
I don't know when their earnings come out here. I think it's not until the 28th of February, but it's coming into a supply zone. So we don't want to use the news as our decision-making process. We want to use the chart, and it's all about supply and demand in the markets. Just real quick, explain supply and demand in the markets.
Yeah, let me just comment on news. You mentioned we don't want to look at news. News is old news. When you hear about something, it's already happened. So we don't want to look backwards. We want to look forward, and we use supply and demand to be able to do that. No matter what you're looking at, no matter what part of the financial world you're looking at, supply and demand, that law of supply and demand is something that can't be argued. When there's more demand for something, price is going to go up. When there's more supply, price is going to go down. And what we look at, just substitute, instead of demand, look at it as being buyers. Instead of supply, look at it as being sellers. That's what moves the price of something. It's enough buying activity to move the price of something. When that happens, the public typically does what we follow a herding factor. Basically, they want to wait until they see something happen, then they jump in. So the institutions kind of get these things started, and then they rely on the public to jump in and kind of help provide a profit for them.
Correct. Yep.
But the institutions will only buy something when they feel there's a real true value for them for that particular asset. So here's the great thing. We don't have to go through all the work of trying to decide whether it's a good value or not. That's doing the fundamentals. Let the institutions do that. They have the ability to put billions of dollars into research and data that help them identify what the true value of something is. That's when they're going to enter a trade. So would it be helpful if you could know in advance when they were going to do that? And the obvious answer is yes. That's what we teach you in this class. We teach you or show you, introduce you to a strategy we call core strategy that is designed basically just to follow what the institutions are doing. You don't have to be brilliant to be successful as a trader. You just have to be smart enough to follow the people that are brilliant.
Yeah,
and they leave footprints for us on a price chart, which we show you how to read and how to identify where those footprints are.
Yeah, and we have these classes here locally at our academies. These are great classes because it's what do you have to lose? For one, they're free. Then you can see what the opportunities are, see how that core strategy works. Online Trading Academy has been doing this for over 25 years. There's really nobody else that has been around that long that does this type of education, and they don't teach this in schools. So we're seeing a lot of people, all ages that are coming into these classes. We're seeing a lot of people that are near retirement that are saying, hey, okay, my 401k is not doing as good as it used to be. Now I need to do something different. And income strategy is what they're looking for. We'll talk about that coming up. But you can just text the word investing to the number 210-210 for some tickets for this investing class to get started with that financial journey. It's the new year. It's still January. Let's get that financial year started here by coming into one of these classes. Text the word investing to the number 210-210 right now for 2 seats for this class. You're mentioning news and how when the news comes out, they want the public to kind of jump on after things happen. We've been talking for several weeks here now about one of my favorite stocks, WWE.
We have.
And they had some rumors of a sale back on, I believe it was the 5th or the 6th of January. And price went from $72 all the way up to $93 in just a couple days. And the rumor was they're going to sell for $89 a share roughly, and as we're doing the show here, price is right around $89 per share. So as what you're talking about, this news comes out, and we don't know the news until after it's out. By that time, the majority of the move has happened already. So, do you want to just go and buy WWE just because now it looks really good? That's what a lot of people do.
Exactly.
They buy after. I mean, think about it this way. Most people buy a stock or whatever that may be in the markets after price goes up. Mm-hmm. You want to buy things on sale. Just like you say you go to Target or whatever grocery store you like, and you say, okay, am I going to go buy this loaf of bread? $2. I'm going to wait until it goes to $3, and I'm going to buy 2 of them. You would never do that in your everyday life. But people do that in their finances, or in the market, because they're conditioned to do it the wrong way. I want you to talk a little bit about that core strategy and supply and demand, and how it's really helping people make comfortable investing decisions.
Mm-hmm. Well, one of the important things to be successful as an investor or trader is the profit. I mentioned making money, profiting. And if you wait until the major move of a stock has already taken place, a lot of the profits are already gone. And if you can identify where that turning point that's going to start a trend, so to speak, where that happens, that gives you the opportunity to ride as much as possible that trend before it's over. And how do you identify when it's over? Because that's when you want to get out of a position. Both the beginning of a trend and the end of a trend are caused by institutions. It's those turning points that we want to identify. And because of the way Wall Street has to invest, the way they invest, we can take advantage of that. And in these classes, we'll talk to you about what we mean. But we know when Wall Street takes a position in something, it's going to happen again. And we can identify where that's going to happen on a price chart. So you can have a trade set. Just wait for the price to come to you. And then the institutions, Wall Street is going to be the one that activates things and starts the price movement. But you're already set there. You should be set with your entry price, with your protection in case you are wrong, and then also with your profit. And think about it. If you buy something and it starts going up, how do you know when to take a profit? When is the right time to sell? For most people, it's just a guess, and it's based maybe more on greed than anything. But at some point in time, the price of anything will stop going up, at least for a while, pull back a bit before it goes back into that upward movement, or it just rolls over and starts going down. Something caused that to happen. We want you to be set at that point when that happens with your target there. So you get out and you protect your profit.
Yeah, the great thing about that is, a lot of people are listening and thinking, well, I don't have the time to do that. Mm-hmm. Well, what we train you to do at Online Trading Academy is actually set your computer to do it for you while you're not at your computer. So we have a lot of people that come to these investing classes that are looking for an extra income strategy, whether during their retirement years and they don't want to have a second job or go back to work, or people that are still working, they want to have that second income stream or strategy to hopefully build more wealth. So we train you at Online Trading Academy how to set those trades up in advance and wait for price to come to you, as Al is talking about. Now, that's where you get in, but also where to get out, and that'll actually automatically do that for you. So people that are looking for those income strategies, you can still do this on top of your job. It's just you haven't been taught yet how to do that. And we introduce you to these different techniques and these concepts in these investing classes. And it's all about, as Al was talking about, the turning points of price. That's where you find that lowest risk. You got to keep that risk low no matter what. Highest reward, and then highest probability entry points in the financial markets. So we have these investing classes. I want to invite you to come into one of these classes to see what it's all about. We have these classes during the week. We also have them on the weekend. Al teaches these. I teach these as well. We have a great time, and it's almost like a roundtable discussion. It's talking about the markets. If you have questions about income strategies or your 401k or IRA, which we'll talk about in the next segment, so make sure to stay tuned for that. Bring those questions in. Make sure we get those questions answered so that way you can hopefully make smart investing decisions moving forward. So you can text right now for 2 seats for this class. By the way, they're free. You can text the word investing to the number 210 for 2 seats. When you text, you're going to get a text right back to find a date that works best on your schedule. Text the word investing to the number 210 right now. Coming up next, stay tuned. We're going to talk about those 401k and IRA strategies within your retirement years. Text the word investing to the number 210-210 for 2 seats for the investing class. This is Josh and Al, investing and trading live. We'll be right back.